What is economics? Economics is like a game we all play every day without even realizing it. Imagine you have a basket full of goodies, like money, time and resources, but the basket isn't bottomless. You've got to figure out how to use what's inside to get what you need and want. Economics helps us make these decisions, whether it's choosing between buying a new toy or saving for something bigger later on. Needs versus wants, the grocery store game. Let's say you're in a grocery store with $10. You need to buy lunch, but you also really want that candy bar by the checkout. The $10 won't cover both, so you have to decide, do you buy the healthy meal you need, or do you spend it on the candy bar you want? This is economics in action, balancing your needs and wants when you've got limited money. Money is your superpower. Think of money as your superpower. It lets you trade for anything you need or want, whether it's a sandwich, a video game, or even a car. But like all superpowers, you have to use it wisely. If you spend all your money on one thing, you might not have enough left for something else that's important. Supply and demand. The cool toy example. Remember when that super cool toy was all the rage and everyone wanted one, but the store only had a few left? That's supply and demand. Supply is how many toys the store has. Demand is how many people want the toy. If there are only a few toys and a lot of kids want them, the price might go up because everyone is competing to get one. But if the store has a ton of toys and not many people want them, the price might drop. This is why you sometimes see things go on sale after the holidays, the demand goes down, and the store wants to clear out the extra supply. Opportunity cost. Choosing between fun and future. Let's say it's Saturday morning and you can either watch cartoons or help a neighbor rake leaves for $10. If you watch cartoons, you enjoy your morning, but miss out on the $10. If you rake leaves, you earn money, but miss the cartoons. The thing you give up when you make a choice is called the opportunity cost. Understanding this helps you make decisions that balance what you want now with what you might need later. Saving versus spending, the cookie jar example. Imagine you have a cookie jar that represents your money. Every time you get some money, you can either take a cookie, spend it, or leave it in the jar, save it. If you keep taking cookies, you'll enjoy them now, but soon the jar will be empty. If you save them, you might not have as much fun today, but you'll have a big stash of cookies for later. This is the balance you have to strike between saving and spending. Why do prices change? The ice cream stand and inflation. Let's say there's an ice cream stand at the park. On a hot day, everyone wants ice cream, so the stand owner might raise the prices because demand is high. But on a cold day, fewer people want ice cream, so the prices might drop to attract more customers. This change in prices happens because of supply and demand. Another reason prices change is because of inflation. Inflation is when the overall price of things slowly goes up over time. For example, if your favorite ice cream used to cost $1 last year, but now it's $1.20, that's inflation at work. Inflation happens for several reasons, like when it costs more to produce goods or when there's more money circulating in the economy. When prices rise due to inflation, the money you have doesn't go as far as it used to. That's why saving money is important, so you can keep up with rising costs. Jobs and income. Why people work. People work to earn money, which they then use to buy the things they need and want. Different jobs pay different amounts of money depending on how much skill or experience the job requires. For example, someone who works as a doctor might earn more than someone who works at a coffee shop, because becoming a doctor requires many years of training. But money isn't the only thing to consider when choosing a job. You also want to do something you enjoy or find fulfilling. The trick is finding a job that balances earning enough money with doing something that makes you happy. Banks, where money grows. Banks are like safe storage for your money. When you put money into a bank, it's called a deposit. The bank keeps your money safe and might even pay you a little extra for letting them hold on to it. This extra money is called interest. So if you deposit $100 in the bank, you might find you have a little more than $100 later on, thanks to interest. Banks also lend money to people who need it, like if you want to buy a car but don't have enough saved up. The bank lends you the money and you agree to pay it back over time, usually with some interest. It's important to borrow wisely and make sure you can pay back what you owe. Borrowing money, the credit card story. Imagine you have a credit card, which lets you buy things now and pay for them later. It sounds great, right? But here's the catch. If you don't pay the money back by a certain time, the bank will charge you extra, which is called interest. So, if you're not careful, you could end up paying a lot more than what you originally borrowed. That's why it's important to only borrow what you can afford to pay back. The government and money, taxes and services. The government collects money from people in the form of taxes. This money is used to pay for things that everyone needs, like schools, roads and hospitals. The government also makes decisions about how much money should be in the economy and sets rules to keep things running smoothly. For example, if the economy is struggling, the government might decide to spend more money to create jobs and help businesses. Or if prices are rising too fast, like inflation, the government might take steps to slow things down. Trade between countries, the banana and car deal. No country can make everything it needs, so countries trade with each other. For example, one country might grow lots of bananas but not make cars, while another country might be great at making cars but not grow bananas. So the two countries trade, bananas for cars. This way each country gets what it needs. Trade helps connect countries and keeps the global economy running smoothly. Why some countries are richer than others. Some countries are richer than others because they have more resources, better education systems or more stable governments. For example, a country with lots of natural resources like oil or minerals can sell those to make money. A country with a strong education system can produce skilled workers who create valuable products and services. Meanwhile, countries that don't have these advantages might struggle to grow their economies. Richer countries usually have better jobs, higher incomes and more opportunities for their people. Poorer countries might face challenges like unemployment, lower incomes and fewer chances to improve their lives. Wrapping it all up. Economics is like a big puzzle where every piece, money, jobs, prices and choices fits together. It's not just about numbers or boring facts, it's about the real-life decisions we all make every day. Whether you're a kid saving up for a new toy or an adult planning for retirement, understanding these basic ideas can help you make better choices with your money. Remember, it's not just about how much you have, but how you use it that counts. Inflation, for example, is a reminder that prices can change over time, so planning ahead and making smart choices now can help you in the future.